Hi, everybody. My name is Nina Gruber. I work with Local First Arizona, and I am part of the Arizona Economic Resource Center, which is working to build capacity for rural and tribal nonprofits and entities around the state of Arizona in order to facilitate more grant winnings coming to our state. So, with that work, we have found that we wanted to develop this workshop series in order to build capacity even further, spread the love, and share some of the knowledge that our amazing contracted grant writers and grant support consultants have. With that, we have Maddie Bynes Devaney here to talk about organizational accounting and finance for grant readiness. This is a really helpful webinar to kind of help us get through and set ourselves up for success on grant readiness. Just some logistical notes for the conversation today. Maddie has allowed us to offer questions throughout. So feel free to drop questions in the chat and we can get those filtered up to Maddie as she's presenting. And we will be sending out these recordings as per usual, along with a survey to ask you for your opinions for other workshops that maybe you're looking for. And we would just really love your feedback on that. But yeah, we'll be sending out those recordings over the next couple of days here. So thank you all for being here. Just a quick thank you to the sponsors that are helping the Arizona Economic Resource Center function. And with that, I will pass it off to Maddie.
Thank you so much, Nina. And hi, everyone. I'm Maddie Bynes Devaney, and I'm the principal of Bynes Consulting Group. We're a small consulting group. We have deep roots in Southern Arizona. I'm based in Washington, D.C. My consultants are based all across the country, including in Arizona. And we work on strategic funding practices, public policy advocacy, federal grants, program development, operations, continuous improvement, all of that type of stuff. So if you're looking for help, I am going to drop my email and phone number into the chat. Feel free to reach out. And we always love to hear what people are doing. Next slide, please. So, in terms of just really understanding grant budgeting, I thought that we would take this time to understand some of the broader concepts behind grant budgeting. And then I know in a future webinar, you're actually going to get down into the weeds of how do you structure a grant budget and stuff like that. So, we're going to take it more macro and then you'll get more micro in a later session. So, next slide, please. When we're understanding the different types of grant budgets, I think it's first important to understand what type of grant you are applying for. I generally group grants into four main categories: corporate and foundation grants. So that might be Arizona Complete Health has a grant process, or Vitalist Foundation has a grant process, or any number of foundations or corporate. Wells Fargo has a process. Chase has a process. All of these, right? That's what I would group into the foundation corporate grants in terms of the structure that they're looking for in their budgets, in terms of the writing that they're looking for. It generally is around the same level. Then I would say you would have local government grants. Those can be actually a heavier lift than you might think. Especially nowadays, a lot of local governments are using federal pass-through dollars or state pass-through dollars, so they tend to need a lot more reporting. State grants tends to be a little bit more work than that. And then the big kind of overall, the hardest one is going to be a federal grant contract or cooperative agreement. And so I think it's important as you're looking at these different types of grants, just knowing, okay, what in general, if I'm going for a foundation grant, I'm probably going to spend less time on their budget than I am if I'm going for a federal grant that has match requirement and reimbursement option. Those are the types of things that I just think jump out at you right up front. But in terms of financial questions to think through, I think that you should probably look and see what type of budget does this grant require? Are they requiring an overall organization budget? Are they requiring a program specific budget? Do they want your program budget and then you break out how you're spending the grant money? Or are they just going to give you $20,000 and you get to figure out how you're spending the grant money? Those are different types of questions that you may want to ask. You'll also want to understand, and this is really important for your financing of the program. Is it a reimbursement based grant or contract? And we'll go over what that means a little bit later in the presentation, but a really, really critical question to ask. You'll also want to know how flexible the funding is that you are applying for. So you'll want to make sure if the funding can be used for, sometimes you'll get a grant and you have to buy the singular Dell laptop that you said you were going to buy in the proposal. Sometimes you can just say, I'm buying technology. And that might allow you to use it on a laptop plus software you realized you needed when you didn't know all the intricacies as you were planning out how to develop your program. And then you'll also very critically want to understand if the grant requires matching funds. That means funds that you contribute to match what the grant is contributing. So next slide, please. In terms of foundations and private funders, so that's that corporate foundations area that you'll want to look at. A lot of foundations will either be program specific grants, so grants that specifically go to a restricted program. If you get those dollars, you have to spend it on that program, versus grants that go to general operating. So you may be able to apply for a grant for Local First Arizona, and that just goes into your general operating unrestricted funds. That's the best kind of grant. That's the one we always like. Second to that is the restricted dollars. So you'll want to make sure you understand what you're applying for and what that means. You'll also there's matching grants or challenge grants. This is a really good opportunity as a fundraiser or as a part of a fundraising team. Let's say someone gives you $100,000 but says you have to raise $100,000 in order to draw down their 100,000. That means that then you go out into the community, you raise $100,000, but that dollar for dollar match means that you'll get $200,000 out of your work to raise $100,000. Those are really great requirements. And then capacity building grants are really good too. These are specifically interesting grants because they allow you to look at how do I actually build this out? What does my program need to succeed, and what kind of capital, not just in terms of physical building space, but in terms of labor, in terms of supplies, in terms of organizational technology and organizational structure, do you need to make programs successful? So these are generally the four buckets that I see in foundations and private funders. Next slide, please. Government grants. Government grants are my specialty, so I'm a little bit biased. I like to write them more, although the foundation grants are fun. The government grants are tend to be a bit more complicated, especially as they come down to money. Because when you report on a government grant, every dollar has to be accounted for. So there are cost reimbursement grants. That means that the funder, whether it's the local, state, or federal government, is going to give you money on a pre approved budget and you're going to invoice them or send receipts for what you spend. So you're going to create a budget, you're going to spend the budget, you're going to invoice the government, and then you're going to get the money. This is really important to understand because if you don't have cash flow coming in beforehand, a cost reimbursement contract is going to be very hard for you to execute on. If you don't have the $100,000 in the bank, you need to build $100,000 program, and then you're recuperating $100,000 from the government funder. If you don't have that initial 100,000 to spend or a way to get it, it's going to be difficult for you. A fixed amount or a lump sum. These are the types of grants, in all transparency, most nonprofits really love. This is that the government will pay you a specific amount of money up front or at a predetermined milestone. So they may say, every quarter you can invoice us $25,000. That'll give you $100,000 throughout the year. And you have to meet these specific criteria. There's also advance payments. So they may say, here's $100,000. We approve your budget and we expect you to report on that at the end of the year. So you want to know what type of structure it is, because if your organization can't put that money up front, that becomes an execution problem down the road. Next slide. The financial structure of government contracts can be a little bit sticky and different. So, government contracts are really a mechanism for you to procure something, and it is risk allocation for the government. So, there are fixed price contracts. And there are two contracts that you should know: firm fixed price contracts. And this is a contract where the price is exactly the same regardless of how much the service costs. So if it's a firm fixed price contract, the service may cost $20 per unit. And in a year, the service may cost $25 per unit because of inflation or cost of living increases or whatnot. They're still going to pay you $20 per unit. That's the fixed price. Then you can have fixed price with economic price adjustment. So that is, okay, we're going to have a little bit of an adjustment year over year to the rate. That allows you to increase that rate with cost of living. Usually it's attached to something like CPI or chain CPI. Those are inflation index numbers that are released by the Bureau of Labor Statistics. And then you have cost reimbursement. So there are kind of three major ways that comes through. You have the fixed fee. So that is that you as the contractor are reimbursed for all costs at the profit fee is locked at the start, regardless of what that cost is. So if you end up spending more, you're still only getting the $100,000. Doesn't matter if you spend more. You have an incentive fee structure, so that incentivizes you to spend the money to get the project done under budget and ahead of schedule, which would allow for a fee increase. And then you have the cost plus reward fee. So the contractor, which would be you, would receive a base fee. And then if you hit your milestones or any performance metrics or something like that, you may be able to earn additional funding based on how your contract is set up with the federal government. Next slide, please. So, looking at your organizational readiness to apply, this is really important. I get a lot of clients coming to me, or potential clients, I really want to apply for this huge federal grant. Great. Let's talk about your readiness. Not only on the financial side, do you have SAMs? Do you have a DUNS number? Do you have a single audit? Do you have all of these different things that will make it important as you're going into that application process? There are a lot of things you need to do to become grant ready. And we can talk through that with you. But in this specific case, we're going to look at the grant structure or the finance structures. So one thing that you're going to want to do is fund accounting. So you're going to want to keep your buckets separate. What this means is that you can't just, if you want to be funded, you cannot just dump grant money into your general bank account. You will need a segmented general ledger. So this is a finance system that allows you to track each grant through an ERP or an accounting software. And then you'll want to, again, we talked about this a little bit earlier, but look at restricted versus unrestricted funds and net assets. So grants are technically, they come to you as temporarily restricted. The money can only be spent on what you apply for. So if you get a grant, unless it's an unrestricted grant, that general fund grant, the grant would need to be spent in the way that you said you would spend it, and it needs to show up in your accounting system that way. When you get audited, this is really important. um, funds will be released once the funding is properly spent. So, and you could talk to your accountant about this. This is not, I'm more of a grant writer, so this is not really my area of expertise, but the basic premise of this is that you really do need to make sure that every grant is segmented in your general ledger and that every service is segmented out into restricted services so that you're able to keep all of that income and expense separate. Next slide, please. Here's some things that you may need as you're looking to work on a grant. So if you don't have these, this is a great slide to just take a screenshot of right now and say, hey, I'm just going to go back to my finance and my HR and whatever. I'm going to get these documents and I'm going to put them in a folder. That way, when you apply for a grant, you have your tax determination letter, you have your SAMs done and UEI numbers already, you have a clear history with the funder. So what I mean by clear history with the funder, have you spent all your money on previous grants? Have you had any findings in your reporting? Anything like that would necessitate would make it necessary to have a conversation about, okay, what does this look like to move forward in this grant process? You'll also want, again, working capital. So that money, that flow of money to come through, especially if you're looking at a reimbursement based contract, you'll need clean financial statements. A lot of times they'll ask you for a profit loss statement. They'll ask you for a general ledger. They'll ask you for a balance sheet. They'll ask you for your audit, a single financial audit. They'll ask you for internal financial controls. So they may ask you for your policy and procedures that have been approved by the board. They may ask you what type of fund accounting software you use. Time tracking capabilities we'll get into in a minute, but really you'll need to look at things in terms of time and effort, which is a policy that you can put into place. And many accountants and auditors are very familiar with that. And then they'll also look at written policies and procedures. So making sure that you have all this in a central place. A lot of this is just like, you have one PDF, you upload it with every single grant. So I always put together an organizational documents folder. That's a great thing for you to do to get ready to apply for grants. Next slide, please. Categorizing expenses is also a really tricky area when you're talking about grant budgeting because, a lot of times it's like, I don't know what's going to happen in a year and a half. I don't, my career was really taking off during COVID, and that just really taught me like you don't know what's going to happen, right? And so I actually posted something on LinkedIn 2 weeks ago or so, and it was a satire of a guy asking foundations, hey, can you send me I really want to donate to your foundation. Can you send me your last 5 years of finances, your last 5 years of reports, yada, yada? These grants can sometimes, and why I'm sharing this, these grants can sometimes be a little bit ridiculous in terms of we don't know. We don't know what's going to happen. We don't know how the money is always going to be best spent. And we want to be both judicious in how we plan something out, but then prudent down the road to be flexible to change. Because that change, especially in today's day and age, I couldn't have predicted AI or any of this stuff coming. I mean, probably could have predicted a little bit of AI, but either way, I didn't know what it looked like so many years ago, right? So you'll want to kind of have that mentality as you're categorizing expenses. What I mean by that is make sure that you're maximizing your own flexibility. Next slide, please. First thing we need to talk about when we're talking about expense categories, one that I see clients mess up a lot on is salary versus ERE. So, salary is usually accounted as a full time equivalent. Full time equivalent is the number of hours that it would take in an annual period for someone to work a full time job. So, 40 hours a week. I have it in all of my spreadsheets. I think it's 1080 is the number of hours that it takes. So if you're looking at the salaries, you may want to look at if that's a half-time person, that's 50% of an FTE. If it's a quarter-time person, that's 25% of an FTE. But what does that look like in relation to your employee-related expenses? Right. So employee related expenses are anything pooled cost related that is not salary. And these have to be split up in most grants. So you may have, the person's take home pay, for instance, that's the salary, is $75,000. But the ERE, which is the FICA taxes, the health and welfare, so that's your health insurance, your workers' comp, your retirement, your paid leave, all of that kind of stuff. It's all employee related expenses. That's usually accounted on a grant budget as a X percentage of your salary. So for the most part, it's around 20%. Now, if you're working a part-time job, that will be less because usually part-time doesn't get full benefit. So say you have a 0.25 FTE and you're only planning on having someone work for 25% of full-time equivalent, you wouldn't have to offer them health insurance. Subsequently, their ERE would be a bit lower. Talk to your finance team or your accountant of what your ERE should look like and just make it consistent across the board. The big thing to take away is that these are two separate line items. You don't include the ERE with the salary. And ERE is often also just on grants referred to as fringe benefits. So if you see a line in a grant as either fringe benefit or ERE, that's what that is. And that's how it differs from salary. Next slide, please. You'll also want to understand the classification of costs between direct and indirect costs. So, direct costs are expenses that can be 100% tied directly to the execution of the grant project. So, these are things like staff salaries, specific equipment, travel, training, research, all of those things that really apply directly to what you're doing in the program. That is the direct cost. Indirect costs are shared organizational expenses. So these are things like professional services or IT infrastructure or insurance or administrative overhead. In general, funders like to see this at less than 20%. So your indirect just generally looks better at less than 20%. We'll get into why I think that's a bit of a farce later on. But for just general purposes, less than 20% is what you're shooting for. Now, there are different ways that you can do an indirect cost. You can have your own indirect cost, but you'll need to justify it in a grant. So if you want an indirect cost of 15% or 20%, you're usually going to need to justify that. There's also, you can elect to take the federal de minimis indirect rate, which is 15% across all levels of the federal government, and it applies for local and state as well. So that's an option. And if you're looking at a contract with the federal government, you can also negotiate an indirect cost rate with the federal government. And so that's called a NICRA. And that stands for negotiated indirect cost rate and is often used in federal contracts. Sometimes it's used in state contracts, but it's really a federal thing. Most of my clients, and I've written a lot of federal grants, most take the federal de minimis rate. Um, so that works just as well. You just have to be consistent across the board. Again, talk to your accountant about what you want to implement just to make sure that you're doing it right in terms of IRS tax purposes. Next slide, please. So the next thing to look about when you're putting together a grant budget is really thinking about what is allowable in the grant funding. And I always like to use these four buckets to kind of just understand, okay, is this a reasonable expense? So first and foremost, is the expense necessary to achieve the grant's goals? If yes, you're good to go. Next would be, does this cost reflect what a prudent person would pay on the open market. So we're not spending $5,000 for your Dell laptop. That's not what a prudent person. I just bought a laptop uh, a week ago, so that's why I keep bringing up that I just know that it cost $1,100. So you're not paying $5,000 for it. It's not reasonable. You can't put it in there for $5,000. Can the cost be logically assigned to the grant? Well, if you're buying a laptop, but the grant is purely food distribution, probably not, unless you're looking to do some reporting on it. And even then, you probably need some staff salary. So, you'll want to think through, can this go to this grant? Is it reasonable? And then is it consistent with how the organization is treating overall costs? That's why you need to talk to your accountant, because whatever you do for one grant needs to be done across the board, across the entire organization. You want to make sure that the practice is being done consistently wherever it is. So as you're thinking through what fund expenses may be allowable, these are the things that you'll just want to keep in the back of your mind to keep. I always think of it as like throwing a ball against a wall. Like you throw it once, yeah, it's good. You throw it again. Like just keep hitting your ideas with these questions. Next slide, please. Also want to understand matching costs and matching funds. These are going to be really well spelled out in a NOFO, NOFA, RFGA, RFP, whatever silly acronym they're using to describe an RFP. It will be spelled out. If they need you to have matching costs, it will be spelled out as to what that cost entails. But matching costs essentially represent a portion of the total project expenses that are not paid for by the grant. And what it generally represents is that your organization has skin in the game. So there are kind of two things that you could do. You could do a cash match. Again, a NOFO, NOFA, RFGA, they're all going to tell you if you can do cash or in kind or how this can be allocated. So make sure you're reading that. Make sure your grant writer is reading that. A cash match is dollars that are spent by the organization. So this would be, let's say you have a program you've put together and you have two line staff, they're being paid for by the grant, but you need supervision. The supervision isn't being paid for by the grant, but you know that you'll have a supervisor because you already pay a supervisor. You can say, point 0.1 FTE of the supervisor will be spent on the grant, and that dollar amount would be part of the cash match because you are spending organizational cash on it. It's matching the grant. In terms of in-kind match, the in-kind match are things that are not organizational cash that's spent. So a great way to do that is like, let's say you're using the city of Phoenix's recreation center and they're donating the recreation center. You're not paying a fee. You can ask them what their general fee is for the 2 hours, calculate that, and that could be an in-kind match because they're giving you the space for free. So, some rules around this. It needs to be verifiable and documented. Don't estimate. Make sure that you have some realistic ways to back up your math. Don't double dip with other grant funds. So, if something is federally funded and you're applying for federal funds, that can't then be used as a cash match. Fair market value is really important. So again, you're not paying $5,000 for the Dell laptop. You're paying $1,100 for the Dell laptop. Just understanding, like in general, what an item may cost. And you also need to read through the NOFO or RFP or RFGA or whatever they're calling it to understand if that is an allowable expense. Next slide, please. So this we don't have a poll, but just show of hands. Grouping line items broadly, and I think we've talked about this at least once or twice, but would you group which is better? Would you say that you should in a grant write it as $9,000 for 6 laptops valued at $1,200 each? Or should you write it as $9,000 for IT infrastructure and hardware? Kim is saying B. We got a few A's. We have a question mark. Okay. Some B's, some A's. I think generally from the chat I'm seeing more A's than B's. I actually think it certainly depends on the grant. Next slide, please. But I think the best way to define this is actually going to be B. So you'll want the grant item to be as flexible and broad as possible. So one way to think about this is what if by the time program implementation, laptop prices increase? So you apply for a program in January and you don't get informed till January 2027. That price is now increased by $150. And you can only afford 5 laptops instead of 6. So in this example, we specifically say in A that it needs to be Lenovo laptops valued at $1,200. We want to make sure that we're being very broad. So B is better because it's allowing you to spend it on IT infrastructure. Now, in a federal grant, you may need to go with A because that's exactly what they ask for. But in general, if you can get away with the broader approach, you should get away with the broader approach. Another way to look at it is what if Lenovo no longer has the laptop you want and you want a Dell laptop? Maybe that's something that, if you write it into the grant, you want it to be as broad as possible. The other thing to do is what if you only need 3 laptops, you realize, but then you need a little bit of IT software. You don't know. So having some broad categorization so that it's not so prescriptive for you down the road is really important for your program implementation side of things. Next question. So maximizing your budget. For staffing, make sure that as you're budgeting in staffing, if it's a year over year or multi-year grant, that you have a cost of living increase budgeted in. I see this missed a lot. I see people say, hey, we're spending $50,000 each year for 4 years. Well, 4 years from now, your $50,000 is going to be worth a lot less. So you want to make sure that you're building in that cost of living increase because that's just going to help you with market trends as they move on. Make sure you add in a buffer to each line item. You never know what's going to happen to the market. I don't mean a crazy buffer. I mean if an item costs $104, make it $110 in the budget. So just make sure that you're rounding up just a little bit, give yourself a little wiggle room. It's okay if you have a few dollars left over. It's maybe not so okay if you have a few dollars under because you might not have other grant money to pay for that. You want to always maximize your indirect costs. That's what allows you to pay for your administration. So always maximize that. I'm sorry, I made this and then I actually researched the next day. It's actually 15%. It used to be 10% of federal de minimis. It's actually 15 now. It changed in the last year. And then another way to structure a grant budget that a lot of people like to do is using consultants as a buffer for costs. So you may say, I want to hire a marketing and branding consultant, or I want to do a social media campaign and hire a marketing consultant or something along those lines. But consultants can be scaled up or down very easily. Staff cannot usually be scaled up and down very easily. It's usually an all or nothing game. So it's easier if you're trying to fill out costs to add in something a little bit more flexible. That's not to say don't have your grant pay for staff. Your grant definitely should pay for staff. It's just if you're trying to kind of get to the maximum amount that you want, a marketing consultant might be really good for your project if you need to get more people involved. Or, if you're looking at a capacity grant, you may need an HR consultant to do a rate study. So figuring all of these things out in what relation to what the grant is actually looking for is important. Next slide, please. So, what is the overhead myth? I told you we would get back to the idea of 20% or less spent on administration. This is the overhead myth. So, next slide, please. The overhead myth is that donors and funders traditionally believe that if an organization spends 90% of its budget on programs and only 10% of its budget on overhead, it's effective. Is this a myth or is this reality? What do you all think? In a room of nonprofit people, we all know this is a myth, right? We know that that 10% isn't realistic. And also, um, if you don't have effective overhead, you are mismanaging your programs. And that is not healthy or helpful for the people that you're trying to serve. So next slide, please. We know that it's a myth. We know that we need to be able to spend more on the cost of doing business so that we can then manage an effective program. What do I mean by that? If we don't have solid program evaluation, we don't have solid data, you're not going to get the grant again. So having someone who is able to collect that data, monitor that data, and then report on it is really important. It may not be your grants person, or sorry, your programs person. It may be someone in administration. That's okay. But we need to make sure that the infrastructure is there so that you can perform on grants. Next slide, please. I think it's really important that we avoid the nonprofit starvation cycle and the nonprofit starvation culture that even even in my own family when I'm having conversations with people, they're like, "Oh, why can't nonprofits, they should do this on a shoestring budget." I think I'm probably in the right room when I'm saying no, we shouldn't. And we shouldn't for good reason. We need to make sure that the administration and that things are really done well. And that being done well allows us to be compliant, it allows us to be lawful, it allows us to be effective. So it's really important. One thing I think is really critical is that we don't rely on grants for everything. Grants are part of our funding structure and a part of our funding model, but they're not the sole part of our funding structure and funding model. And it's important because, as we saw last year, if the federal government says, hey, no more grants, that's really going to mess us up moving forward. So you need to have it, but have it as part of an effective strategy to put together your entire organizational budget. Make sure that you're doing fundraising, make sure that you're doing offline outreach events, make sure that you're doing corporate and individual philanthropy. But through all of this, make sure that you're giving fundraisers a realistic expectation of what that overhead entails. If you're going to be doing all of this fundraising, you need fundraising people. And that is realistic and helpful and useful for you to improve upon your mission. You also need to make sure that you're investing in IT infrastructure. I remember I worked a job once at a nonprofit, and they didn't have IT infrastructure when I got there, essentially. And the issue with that was people are wasting so much time in giving papers back and forth or organizing data on paper spreadsheets or even on Excel spreadsheets when it could be done by cheaper CRM. So that time you're wasting by not putting that forward in a software or something like that that could be more efficient is really taking from your mission. The other thing that I would say about organizational underinvestment is if you're doing a lot of what I do is in health and human services, it has to be HIPAA compliant. So making sure that you have the proper IT software to make sure that you're compliant with the laws that you need to be compliant with, that's critical for you to move forward, to get funding and to reapply for funding. And not only around your funding, but to make sure that you're compliant in your overall organizational practices and aren't getting fined. You also don't want to misrepresent data. You want to make sure that whatever you're telling the funder is the truth. And in order to do that, you need to make sure that your data gathering practices as an organization are effective data gathering practices. So, that shared Excel document on your shared drive that people check in and out, and then someone wipes out in the middle of the night, and then we all have a panic and a crisis at 8 a.m. when we come into work, only to find that there's a revision document history that we could pull up. Let's stop doing that. Let's let's make sure that the data is in a place where it can be aggregated and collated in a way that can show a story and that is always available, and that isn't checked in and out on a shared drive. Let's make sure that we're using the proper IT infrastructure so that you're not erasing the amazing work that you're doing in the community, because we all know if picture doesn't happen, it didn't happen, right? And so you need to make sure that the data is there to show your funders. And then making sure that you're avoiding systemic failure. So infrastructure crumbles slowly. And I think we can see this in roads and bridges. The truth is the same for nonprofits. If you are having this slow infrastructure crumble, it erodes at other areas of your organization. You will have higher staff burnout because they'll be so tired from the silly 2 a.m. data loss that could have been prevented, that they know could have been prevented, and now they're frustrated. You'll have more data breaches, you'll have more failures of compliance. So make sure that when you're looking at grants, you're also looking at the opportunity to make sure that your infrastructure is there. Because we all know that that is actually what is going to produce the best results for the funder and for the people that you serve. So I will get off my high horse about avoiding the nonprofit starvation cycle and the nonprofit funding myth, but I do think that it's important that we all understand that we can't underinvest in these areas any longer, especially as technology becomes more and more a part of our lives. Next slide, please. So, what are the key takeaways? How can you apply this to your organization? How can you apply this moving forward in your grant writing practices? Next slide, please. Understanding the key takeaways is very important. So, understand the type of grant or contract that you're applying for. If it's a federal grant, if it's a cost reimbursement contract, those are all really important to understand your cash flow, how the cash is going to move from the grant to your organization, and how you're able to fund it within your organization. Understand what type of financial mechanisms and the funding would come from, for you to decide if your organization can appropriately manage that funding. So if you, for instance, have no cash reserve and it's a completely reimbursement based contract, maybe not for you unless you can find a way to get that cash up front. Um, you also want to ensure that all of your documentation is grant ready. And so making sure that you understand where all your documents are. Again, I highly suggest an organizational documents folder that's easily accessible to multiple people on your administrative team is really, really key. One thing that I didn't go over so much, that I do think is important, is also making sure that you have a time and effort policy. So this would allow you to charge percentages of different individuals to different funds in your organization. So, you may have your executive director paid at 20% from one grant, 40% from another, 20% from another, and I hope that made up 100%. I'm not good at math off the top of my head, but I think 40 plus 60 is 100. So anyways, you'll want to make sure you have a time and effort policy. Gather a team that aligns both program objectives with the financial realities of the grant. And what I would add to this that I didn't add when I made the slides is also data that aligns to the program objectives. Because you want your implementation plan, your budget, your program narrative, and your evaluation plan all to play off of each other and match each other. Very important for getting a grant. If I didn't hit this home enough, if you can, when you can, where you can, use broad categories for budgeting. Do not over specify what your budget is going to unless they really tell you you have to. That allows you to move some stuff around if you need to move some stuff around. Don't go hog wild on it. You don't want to be dishonest, but make sure that you are using some broader language when it comes to categorizing expenses. You'll want to maximize your indirect cost allocation where possible. Making sure that you have enough indirect cost is important to avoid that burnout, the staff overwhelm, all of that kind of stuff that comes with under developed infrastructure at nonprofits. And then, very critically, grants should not make up your entire organization's budget. Grants are fantastic. I love grants. I write grants all the time. You also don't want to rely on just grants. You need to have a plan, or at least the means of getting a plan in the next few years, to get away from relying on just one or two grants. Make sure that you're diversifying your funding sources. Next slide, please. So this is my contact information. I also placed it in the chat. Feel free to email or call. We are looking to work with new organizations. We would love to work with you if you are looking at a grant, or if you're looking at strategic planning, if you're looking at advocacy and public policy. Our team is here for you. Systems change work in health and human services. It's usually our jam. And we're really excited to help all of you. With that, I'd love to take the last few minutes for any questions that anybody may have. And I think you have one more ending slide, Nina, for you
Yeah.
all.
Yeah, thank you. Yeah, feel free for anyone who wants to put a question in the chat. Ooh, Robin has put something in the chat for our survey. So if you want to click through that and give us feedback on today's webinar, or if you've taken other workshops previously, feel free to rinse and repeat on that. But yeah, if you have any questions for Maddie, we have her wealth of knowledge here. I did just want to interject while folks are maybe thinking of questions is I think what really resonated for me in this conversation is that all of this work is, we framed the workshop as for grant readiness. It is work that should be happening prior to a specific grant opportunity. This is organization wide. This is really important work that can really set you up for success no matter what grant you approach. Now, do you need to get your sam.gov registration if you're just applying for foundation grants right now? No, but knowing that that is something that you have to eventually do, it really just sets that foundation for you to work towards the larger goal. So I really appreciate it, Maddie, how you kind of gave us this like broader understanding of these are pieces to kind of put in place so that you can get to that point of a successful grant pursuit. Are there any questions that bubbled up for folks though during this? I can also drop in the chat here. We do have additional workshops coming up. We also have workshops that have passed, which means that some of the topics that Maddie talked about today are covered in our local learning lab. Like we had one on matching funds, some board management that kind of informs some of this. I know a lot. I see some familiar names in here. Ooh, we've got a question. I'll stop talking. So from Catrice. I have questions on indirect costs. We've generally only asked for direct costs as we didn't know how you would account for/draw down indirect cost. Could you describe more how that generally works?
Sure. In terms of the accounting portion, I'm not an accountant, so I could be missing some marks there, and I would talk to an accountant about that. However, an indirect cost should generally be something that is not program specific, but related to the overall budget. So instead of saying like, if you're doing, one FTE of program staff, that program staff may need an office. So you'll probably need rent or mortgage. They'll need taxes to be paid. They'll need utilities. They'll need IT infrastructure. All of those things that are pooled between multiple employees, right? You're not getting an office. Well, maybe you are, but likely not. You're not getting an office for just one employee. You're getting it for multiple employees. So general rule of thumb, if you can pool it between multiple grants, so multiple funding sources are paying for that, then it's generally good sign that it might be an indirect cost. But again, I would talk to your accountant just specifically on that to make sure that I don't want to give a general answer and then like you have something in your organization that I haven't accounted for in this answer. So I would just generally say talk to an accountant, but in general, if it can be pooled together, it's usually an indirect.
Thank you, Maddie. I also would just like to point out from a resource center view of why some of this is really important. You touched on some great stuff, Maddie. And especially when you get to talking about having those documents prepared internally in your organization, it's really important also when you work with our contractors like Maddie and also just with Nina and I here in the center. Due to the quick the notice of fundings and the time frame that they are doing now and how quickly they are dropping, getting all these documents ready absolutely is one of the key things, critical things that we've noticed here at the center that is able to get you over and get organizations over the challenge of these very fast dropping notice of fundings and the very fast turnaround time. So even as you're working with our grant writers and our consultants here at the Resource Center, having all of that is integral and critical to getting that fast turnaround time so that when you meet with our grant writers or any grant writer in your own organization, having these things quickly, the narratives, any program budgeting information you might have, we're finding is the critical piece between that sounds like a great opportunity. I already have so much on my plate. I don't have time for this to, hey, here's a packet with all of the stuff we have. Hopefully you might already have a budget. Can we move forward with this? And it's really integral with the grant landscape now is the preparedness and having all those financial documents ready to go.
I'd say, Robin, that's a great point, and not related to financial readiness, but just in general grant writing. One thing that I always do at the beginning of every grant is put together, if it's foundation grant and I know I can knock it out in 2 hours, that's a little different, but generally I'm writing larger grants. If it's a larger grant, any sort of government grant, I generally put together a Gantt chart for the client and then I look at, and the thing that I always start people out with, like day one, we need to talk about where we're getting resumes, MOUs, letters of commitment, and your organizational documents. That are those are always the things that are going to hold you up at the very end. So make sure you get those out day one and make sure you're following up on those requests week after week because they don't take a lot of your brain power. They just take a lot of time to manage to get back to you. And
Absolutely,
Renee, I
Maddie.
don't know if you had a question about Gantt charts or if that's just I can explain what a Gantt chart is if you need.
Please do.
Yeah, so Gantt chart is a basic project management tool. It basically has tasks and then a timeline for you to complete each task. So it's a visual way of tracking. What I usually do is combine a Gantt chart with a RACI chart. RACI stands for responsible, accountable, consulted, and informed. So not only do you have the tasks, but you have the person who's responsible for the task and then the timeline that that person has and who they need to consult with so that there's a very clear within the team that's working on the grant very clear delineation of who's doing what when and then every week you can go back and check in. Okay, did we meet these goals that we set out? No. Do we need to be a little bit more flexible in this timeline? Where are we going so that we can get these things done by deadline? Because one thing about grants is they are not going to accept your proposal after the 11:59 cutoff time. So you need to make sure that it is done on the deadline, preferably a day or two before.
Absolutely. And going back to the readiness, Maddie, you brought up a good point too. Along with that file that you talked about with all those funding documents is also for that program, if it's program specific, if somebody here is not necessarily entire organizational, but you are working on a program or that specific area, is having those resumes already in the folder. If you know that these are who are doing all of that, like she said, putting all of those again and just kind of creating that um, mainstay folder for grant readiness, organizational readiness. Every grant is going to ask, who are these people that you are putting on these teams? What is their background? And being able to have all of that organized and ready really makes so much difference when it comes to having to write your own grant, or again working with grant writers, or getting it to that part in your organization where there is that grant writer. They're probably a lot happier when you have these things and ask for a grant, instead of thinking of doing the whole process and having to get you to go get all these things. It might make that process a little smoother too. Maybe some mini muffins, I don't know. Um, but all of these are really great, Maddie, for organizational, financial readiness. Is it's not always, ready to do something. In a grant capacity, organizational capacity, the readiness is having the bones of what we know in grants ready, prepared, and in one area. And if finding what you don't have, and moving towards getting those flushed out.
Absolutely.
Awesome. Well, I think with that, we'll end our workshop today. And big thank you to Maddie for all of the work here. And thank you to all who attended and who are watching the later recording. We hope that this helps you get your foundational details set up and in order. And we look forward to seeing you at additional workshops. Thank you so much.
Thanks, everyone.